But now for the scary part. At the end of each fiscal quarter, U.S. corporations move a ton of money around to try and clean up their books for quarterly reporting. And twice a year, they sell a bunch of securities to pay taxes. So during these very predictable times, the Fed will pump up liquidity to make sure that everybody can buy and sell whatever they need. But on several occasions just this year, prior to October now, it hasn't been enough, and so they've had to step in to inject even more money into the system. So what you see here is the liquidity injection prior to October fell on quarter-end days and tax deadlines. So again, not unusual, not a great sign, but not unusual. And then something broke in October. Firms have repeatedly dipped into the Fed repo operations to secure enough liquidity for all market settlements. Now, while the total daily volume is in the billions of dollars and therefore entirely manageable, the point is it shouldn't be happening at all, let alone repeatedly. The only times this has happened in recent memory is COVID. We can't even look to the global financial crisis for guidance because many of these were backstops that were created in the wake of and because of it. So this is all new stuff. And it's unsettling because it means that the private credit market might be running out of money and it might be bleeding over into the commercial market. So when things like this happen, it sends a signal to the managers of the U.S. economy, not just the Federal Reserve. These are the moments when the heads of the U.S. Treasury, the Federal Reserve, Senate Banking Committee, the White House, the nation's largest banks who are also members of the Fed, the Council of Economic Advisors, everybody assembles to address the broader issues in the market. Because only government oversight can compel these companies to open their books so we can stress test this important shadow banking sector. Otherwise, we're all in the dark. And right now, the Fed chair is under fire from the White House. The head of the Treasury is actively running the effort to replace him. The president is completely out of touch in building ballrooms and bombing boats in the Caribbean. And the big banks? Not for nothing, but these are the same people who destroyed the financial system just 15 years ago.